Hey, what's going on, guys? Welcome back to the channel. Just recorded a banger video for you guys. Most requested video we've ever got. It was how I made the 40K that one day trading FX. That was which was like a week and a half ago. All right, so a little late video. It's all good here. Before we get into it though, my name is Don Bo, owner of Control FX. We live stream every morning at 6 a.m. Eastern. If you guys want to catch us there, we take trades live, talk about trades, talk about setups, send me your charts, I review them, all that good stuff. So if you guys want to check it out, go ahead and check that out. But want to get into the video here of how we made 40K trading FX in one single day trading gold. All right, so subscribe, leave a like if you guys haven't done so yet, and I'll catch you guys in the video. Peace. Hey, what's going on, guys? Make sure you guys subscribe, turn your noise on, and leave a like for future videos. Catch you guys there. Peace. Hey, what's going on, guys? So we're back on a video. We're now on the charts. I'm at my desk now. So gonna be taking a look at gold. All right, so it was gold. It was I think it was last Thursday, I believe, right? So that was the 17th. So let's go back to the 17th. What happened that day? So I noticed that the day before that we had FOMC. All right, so if you guys know what FOMC is, let me pull it up for you guys real quick. We had this news folder right here day before Wednesday, right? So this is like later in the day at 2 p.m. I remember this day. I remember I streamed this day actually. And what ended up happening was we didn't catch anything. I saw the move drop. I saw a price drop like 500, 600 pips in front of my face. Didn't catch one single pip. Again, the way I trade news is I don't really like to have like my buy stops and sell stops. I kind of like to just wait for the news to sell down a little bit, wait for the volume to sell down, and then take advantage of the volume. So again, what I mean by that is wait for the range to sell down, or for the huge volatility to sell down. Wait for my price action to follow through. So again, wait for my closures above the ranges, below ranges, whatever it is I'm waiting for, and then I execute my positions with the volume. So I can't just take advantage of it. I don't necessarily just like have buys and sells and look for ways to catch these sniper entries. Like, that's not my style of trading. I used to be like that, but not anymore. All right, but yeah, we had FOMC here. It was at 2 p.m. and I believe they were going to keep the same interest rates for this certain FOMC, but I believe in the press conference, which was a bit later, they talked about how they were going to in the future start to cut rates. So that was the day before. I knew that news the day before. Going on to the next day, I noticed this one thing. So we know that the news, they're going to cut interest rates in the future. And then you notice that again, that gold on that day time frame, let's go back to it. It was like right around here. Look at gold, right? This is the day. This is the Wednesday. This is the 16th. The next day is the 17th, right? See the bottom of the screen. See how it says 16th right there. So the next day was the 17th. So that was the day that we had the huge day. So this is what happened. I noticed that the weekly was heavily bearish. We're heavily bearish. If you look at it, you know, this we create a resistance right around here, and then price came down, create a range here. And you know what's crazy? The day before this, we even like the week of, we actually anticipate price to continue down because we're looking at the weekly time frame from Sunday. We noticed that the weekly time frame closed below the range. Look at this. We had a range right here. You had a resistance form right here. You had a support form right here. Right, this is the level where price has struggled at in the past. This candle right here came down, closed below the range. Therefore, high chance the next candle had to come down towards the next level of support. So next level of support was down here at the 1788 mark, I want to say. So that was like our general target for the day. With that being said, already the weekly time, or for the weekly time frame was already pushing down heavily. We're like coming down, breaking all lows here. So I dropped down to the day time frame, right? So I obviously had a bearish bias in my head, in my mindset, and I noticed that the day time frame closed below the range here. We had a support form right here. So you guys are asking, Don, don't you think you're selling the bottom? No. You know what? You know what I think about that whole, selling the bottom, buying the top thing? You never know when a trend's going to change. You never know when a trend's going to continue, like how long it's going to continue for. You never know when it's going to change. So you don't want to be in a position where you want to constantly predict. We're going to reject here. We're going to reject here. We're going to reject here. Like, follow the trend until it breaks, right? Because in this scenario here, the daytime was like, there was like what is this? 1, 2, 3, 4 bearish candles back to back. I know a lot of people were, especially if you're using fibs, you guys might have seen that 61.8 retracement multiple times throughout the past days, weeks, right? So I've been doing the same thing for quite some time now, and I always tell everyone on my streams, follow the trend until it breaks. Don't try to be a hero. Let the markets come in first. You focus on coming in second place. So I noticed that the daily time from here closed below this range here. All right. So you guys might be asking as well, what's the difference between these candles to the left there compared to this daily candle? The candles to the left there have all rejected. Why has it rejected? Look, let's just focus on this area right here. All right. What do you guys notice with these wicks here? Wicks. What do you guys notice? You guys notice that price, although it made those wicks there, it has never closed below the range before. Never closed. So with us closing below the range, what does that indicate? A closure, right? A closure is different from a wick. A wick can literally do anything. It can come all the way down to who knows where, $1 and come back up to 1700, who knows, right? But this closure right here indicates that we're breaking below support. High chance the next daily candle will continue down towards the next level of support. So if you take a look at it, you have support right around here, and if that level were to close, if we were to close below there and break below, where is your next target in this case? You're now looking at potentially like the support right around here, right? Or even like these levels, this minor level, or even these levels right here. Let's just put that support right there. All right, because look left now, this is now clean traffic. You see how like once a candle closes below here, breaking below support to the left, you have clean traffic driving price down towards the support here at 1778. So look left, clean traffic. Oh, what do you have here? This is some traffic here. So at this area of traffic, that's when you want to consider taking partials or look to close your positions at. So that was how I created my bias with the weekly time frame. I moved down to the daily time frame. I noticed that we closed below that range there. So I expected price to continue to push down towards the next level of support. So moving on to that day, I already expected the next day to be algo. And what I mean by algo is this is a term we use in our live streams to consider aggressive days. And aggressive days don't come very often. So algo days. I think the best way I can describe algo days real quick is I'll drop down to a small time frame, right? I'll drop down to a small time frame here and I'll show you guys what I mean by algo days. All right. So I finally came down towards a small time frame here. And I noticed I want to show you guys an example of what algo days are. All right. So let's just say you have a 15-minute time frame, right? And if you guys on the streams, you guys know what we can do every day. Let's say you have a support formed right around here. Right, let's just say you have a support form there. Why did I say there? Because this is similar to a trivia recon on Friday. This is the exact trivia recon on Friday action. This is the best example I can probably find right now in this case. So you had a support right around here, right? So if price were to close below the range on a 15-minute time frame, we would then execute on sells because we would expect price to continue down towards the next level of support. Look left, that is going to be somewhere around these areas right here, right? Because look left, this is clean traffic. So a closure below this count right here specifically, closing below, indicates that we should continue down towards the next level of support, mirroring this side right here. Obviously, price came down to mirror that side. That's clean traffic, right? And where did price reject that or struggle at? It struggled at the most recent support. So this is like the perfect scenario, a perfect example. Same thing as the weekly did, same thing as the daily time frame did this today. We had a support here. Rejections, wicks. This 1 hour closing below indicates that we're breaking below support because we're actually closing, whereas those wicks in the past have all rejected. So there's a huge difference between the two, and something that's very important to understand. All right, so that's how we came up with the term algo days, because you would then obviously those are times where I would expect to execute on positions coming down. So same goes for the day time frame. If the day time frame is showing me signs that we are, let's go back to it. So if the day time frame down is showing me that same scenario where we have a closure below support, we should expect price to continue down towards next level of support. What would I do this day then? I would look for a lot of sells. I would then look for a lot of sells. I'll mark it up as algo days where I could take a lot more aggressive entries than it would be on a regular day. All right, and keep in mind, these days don't come often. I said before, these days don't come often. So don't expect this to happen every day. All right, but that's the best way I can probably explain that to you guys. It's also another way we can expect volume, because some days when I come to the charts during agent session, I can already see off the rip if we're gonna range that day or if we're gonna move a lot that day due to the fact that we are closing, however, on a day time from that certain day. All right, but this is what I noticed on gold here that day on a day time frame. We closed below. I then expected the next count to continue down towards the next level of support down here at 1781. All right, so now that I have that in my head, I have that set in my head for a day that I'm expecting price to come down. And keep in mind, just because you have something expected doesn't mean it's going to actually happen, right? But You want to follow your plan as you would every single day. And this is the same thing I've been doing throughout the whole entire year this year. I haven't been doing anything different, no different strategy, same patience, same waiting for closures. Everything's about the same here. So there's nothing different today, aside from the fact that we have a huge range going down. All right, so day time frame close below. I expect the price to continue down here. What did I do this day? Asian session came by. Boom. Asian session, didn't trade as much. Was looking for positions, but couldn't really find much that happened that day. So what I ended up doing was I waited for like pre-London to come. So let's just simulate there. Let's go on to like, I think it was around, yeah. So right here, I can already see it. So something that we talk about a lot on the streams or in general with my community is we talk about fakeouts. So last year I don't want to say that like we didn't know how to avoid them, but we weren't I wasn't at least at a point where I was able to see them before they were to come. And this year, I think it was around February, that was when I noticed that fakeouts, well, majority of times, I don't want to say only, majority of times occur when you're going against the trend, right? So this year we came up with a whole new thing, a whole new concept, talking about range 1 and range 2 breakouts. So never go against the trend unless you have a range 2 breakout. If you guys want to know more about that, you guys can ask me on the live streams, or I'll make a video on that in the future, but I don't want to get too deep into that right now. So you had a resistance formed right around here at this resistance here, and then you had a support form right around here at 1812. This is now a range that we are forming. Why is that a range, Don? Because you had a resistance here again, and you have support. A range doesn't always mean that we're going to consolidate. It's just overall ranges that we're breaking into. All right, so this is what I noticed on the 30-minute time frame. So I wait for this. I did not bite on the buys. We always tell our people, do not bite on these buys here, because always follow the trend, and that day the trend was heavily bearish, right? If you look for buys here, you would have got faked out, and that's what happened in this scenario. Price closed above the range. It was still a range 1 breakout. So we said no buys, wait patiently for price to come back in a range, because if price were to come back in a range, it will indicate that we're breaking below support, and price should continue down towards the next level of support, right? So this is what we expected price to do, and that's what we waited for. So let's move on towards that time. And it was right around here, right around there. That candle right there was my entry candle. All right. Again, I was very aggressive with my entries. Not like aggressive where I was like over risking or over leveraging, like nothing like that. More so just looking for more entries, and I wasn't as precautionate with the entries. You know what I mean? Like, because I expected the day to come down already. So it was just a matter of fact of where can I get my entry in, and how can I manage this position coming down towards that daily target that I had in mind. So my daily target levels again was like 1770, 1780, around that area right there. So what ended up happening was when price closed back in the range here, it indicated that we had a high chance that price was going to drive down to fill the range. Right, we had this range here. I don't want to say that it was 100% secured, but I want to say that chances of us coming down was very high. It was 80% chance of us coming down. So I took a position. I got in on the open like candle. I think stop loss was around the previous kind of high on the hourly or something. I forgot what it was, but it was around that area. Yeah, it was like right around here. I think stop loss was like up here for like 37 pips for a TP of like, again, the day runner, right? But we came down towards the target. Cool. I then made it a risk-free trade. I moved my stops to break even as it came down to fill the range, because I noticed that this is a level of support that we have rejected before in the past, and it's gonna happen. We can either reject it, or we could continue back up to retest my entry point. So I didn't want to risk that. I wanted to move my stops to break even, make it risk-free, and just sleep with a peace of mind. So I then made it risk-free. Right before I went to bed though, what I noticed was that we closed below this range here. And if you guys learned something from this video, it was that it's very important to wait for a closure, right? From the beginning of the video, we explained that to you guys. So this candle right here closed below the range, indicating that we were breaking below support. I expected the next price candle to continue down. Obviously at this time I was about to go to sleep, so I didn't care what happened. My stops were at break even, and I think price would just continue to fall. I believe that's what happened. Boom. All right, so at this point I got entries around here. I then move I think all my entries to break even, or sorry, to 10 pips in profit, 10 to 20% profit. I moved it to like some entries at 1818.746. I moved my entries in profit to like 1716. So if price were to come back to my entry, I would secure my 20 pips. I would have been happy because again, that's what we always do. Majority of my positions, I tend to close half of my positions at 10 pips and I let the runner go risk free until my TP. In this case, I did something similar, but a little different. I just kind of moved my stops down to in profit, all right, instead of closing my half of my positions. So again, price obviously came down heavily that day. We have came down, tap our target, and that's how the trade went down. All right, so I think it was like multiple positions I took on that trade scenario. I'll show you guys. It'll be a screen somewhere around here, but yeah, it was that was a trade. But yeah, so a lot of you guys might be wondering, well done, how'd you feel during your trade? Were you emotional? Were you not emotional? And again, I want to talk about I want to say this one thing. We do the same thing every single day, and what I mean by that is we follow the same plan, everything every single day. Nothing changes. We're not going to swing one day. We're not going to scalp every day. We're going to follow the exact same plan. In this case, we did the exact same thing. We talked about algo days in the past. We talked about how algo days you can expect a lot of volume, and you can expect you to take a lot more entries and execute on more aggressive entries. So nothing was different today. We took the entry that we would normally take. The only difference was that we understood that it was algo day, so we left the runner position a lot steeper than it would usually be. Usually I'll leave my runner positions coming down towards the next level of like, the next 4 hour support or whatever it is. But in this case, I left my TP all the way down at the daily level of support, and price ended up coming down to tap those levels. So during the session, I think it was a New York session, I woke up and we got like one more entry as well. But other than that, it was like, it wasn't much like emotional for me. Again, I was doing the same thing every day. I already secured and locked in my 10-20 pips went in profit. So even if the price were to come back up, I'll secure my profits. And let's just say, for instance, this trade were to hit my break even, I would have been fine with that. I wouldn't stress it, just because I understood that by following my plan long term, it'll majority of times it'll work out for me rather than me breaking my plan, breaking my rules just to get one lucky trade in. You know what I mean? So again, I don't chase the market's moves. I chase my positions, my moves. So I have a set playbook of setups that I'm looking for or entries I'm looking for, and that's all I follow. I don't care whatever else happens. For instance, the day before we had FOMC, I did not stress. It was on stream too. You guys saw my reaction. I told you guys, calm down, guys. Tomorrow's gonna be another crazy day, especially if that day tapping closes below that range there, which it did. So didn't flinch that day. Price, I think the day before as well, price also moved a lot more too. It moved 500 pips. The day after it moved around the same, 400, 500 pips. So I mean, it was overall great days, great volume. And again, these days for me at least are very rare. I want to say like I don't get like a 40K day every day. Like usually, like if I take one trade for 10 pips on GJ, I'll be $1,000. If I take a 5 lot on gold, close to full 10 on my normal day, that'll be $500. So usually like it's around that range, like 1,000, 2,000 like a day. If anything, break even. If anything, a loss, right? But you would never see me with 40K day every day, or at least like a couple times a month even. These days don't come that often, and when they do, just be ready for it, be prepared for it. And that's what I did this time. I've seen days in the past where we've moved a lot of pips, a lot of ranges, and I didn't react, follow my plan, didn't get FOMO, and that day I just took advantage of it, and that's all that was. All right, so hope you guys learned a lot from this video, psychology wise, or even just like entering positions wise, or even it's a little depth, like a little like basic strategy that I've talked about. That I didn't get that much into my strategy because that's for a different video, but I hope you guys understood just the whole concept of us closing below the ranges versus wicks versus rejection. So hope you guys learn a lot. All right, so catch you guys in the next video, whenever that is. We'll be live Monday to Friday at 6:30 a.m. Eastern. Peace and love, guys. Catch you guys later, and have a great weekend. Peace.